This module covers double entry accounting, nominal ledgers, and trial balance. While the exam marks for this section are quite small, the concepts are important when it comes to accounting in general. In double entry accounting, every transaction is entered twice, so that it is clear where the items go and where they came from. For instance, if the business owner invested money in the business, the owner's account, which is known as the capital account, gave the money, and the bank business account received the money. Another example would be if we transferred money from the bank account to the petty cash account. The bank account gives the money, and the petty cash account receives it. In this way, we can always show where the items came from and where they went to. Any one account can both give and receive. For instance, the bank account can give money to the petty cash account, and it can also receive money from the capital account. Instead of using the terms giving and receiving, the terms credit and debit are used. The term credit relates to giving and the term debit relates to receiving. At all times, the debit should equal the credits, otherwise some item has not been accounted for correctly. In this case, a total of 10,150 was given and 10,150 was received. Debits appear on the left and credits appear on the right. We will look at this in more detail shortly, and we will also look at some examples of how it works in practice. To fully understand the double entry system, we need to look first at the accounting equation. It is the foundation for the double entry system. At its most basic, the formula states that the resources of the business must equal the resources supplied by the owner, including loans or credit received, etc. The resources of the business are known as assets. The resources supplied by the owner are known as capital, and loans or credit given are known as liabilities. So, the accounting equation can be shortened to assets equal capital plus liabilities. An example of some assets are buildings, vehicles, cash, cash in bank, stock on hand. Debtors are an asset because they owe us money, and it is presumed that they will pay us at some time. An example of some liabilities are loan, repayable grant, and creditors. A loan brings money in, but will need to be repaid at some point, therefore it is a liability. So too is a repayable grant, for the same reason. Creditors are a liability, because we owe them money, and we will eventually need to pay them. Capital is the amount of the investment in the business by the owner. Capital can also represent the accumulated wealth of a business, that is its assets less liabilities, and can also mean stock or ownership in a company. The next topic in double entry accounting that we need to introduce are the nominal ledgers, collectively known as the general ledger. The general ledger serves as a collection of totals, transferred from all books like sales, sales returns, bank account, VAT, fixed assets, purchases, etc. Each nominal account will have its own separate page, divided in two halves. The left-hand side of the page is the debit side, the right-hand side is the credit side, and the title of each account is written across the top. Remembering which side the debits and credits go on is important. It may help to think that in Ireland we drive DR on the left and we might crash CR if we drive on the right. In this example of a bank account nominal ledger, 10,000 has been given to the bank account by the capital account. As you can see, there is nothing in the credit side, and this means that nothing has been paid out from the bank account yet. In this example of a transaction, the owner gives 20,000 to the business and pays by check. Therefore the capital account gives. The transaction is entered on the right of the ledger, which is the credit side. Therefore we say that we credit the capital account. Remember that there are two sides to every transactions. In this case, the capital account gives to the bank account. Therefore, the bank account receives, and this is entered on the left of the bank account ledger. Because debits are on the left, we say that we debit the bank account. Notice that we used bank account as the reference in the capital account. This shows that the capital account is giving to the bank account. We then used capital as a reference in the bank account. This shows that the bank account received from the capital account. Let's look at another possible transaction. The business buys a car and pays for it by check. Again, because it is paid by check, it involves the bank account. Because we are buying a car, we will also need a vehicle account to receive the item. The bank account gives $5,000 to buy a car, therefore the bank gives and the amount appears on the credit side of the bank account. We then create a vehicle account, and for this transaction, this vehicle account receives. In real terms, these two accounts tell us that we now have a vehicle worth $5,000, and we paid for it from our bank account. Here is another example. We buy some office furniture and pay for it by check. We credit the bank account and then create an account for office furniture. The office furniture account receives, so we debit the office furniture account. Again, what this means is that we now have office furniture worth $4,000 and it was paid for from our bank account. This final example shows what happens when we buy items on credit. In this case, we bought office furniture on credit from ABC Limited. Because we sourced the furniture from ABC, and we did not pay for it yet, ABC Limited gives, and their account is credited. The furniture account receives, and is therefore debited. Looking at these two accounts, we can see that we got furniture worth $2,000 from ABC Limited, and we previously bought furniture worth $4,000, which we paid for. So, if we look at all the accounts we just created, we can get a picture of what happened in the business so far. The owner invested $10,000 and deposited it into the bank account. The business then bought and paid for a car worth $5,000. Next, the business bought and paid for office furniture worth $4,000. Finally, ABC Limited provided the business with more office furniture worth $2,000. Each account was created as we needed it. When we bought a car, we created the vehicle account. When we bought furniture, we created the office furniture account, and so on. Take some time now to practice these concepts. Open the workbook and do as many examples as possible. Return to this video when ready. The trial balance is a collection of the final balance from each of the nominal ledgers. Therefore, we need to total and balance each of the nominal ledgers before we get to the trial balance. At the end of each month, we add total lines to each account as shown, one on the debit side and one on the credit side. We add up both sides to determine which side is the largest total, and we enter the largest total on both sides. As you will notice, the side with the lowest amount does not balance. When we add the figures, it is not equal to the total. We then find the difference between the existing figures and subtract it from the total. In this case, we get 1,000. This figure is then entered as a closing balance at the end of the month. What this actually means is that 10,000 came in and 9,000 was paid out, leaving 1,000 in the account. It means that there is 1,000 at the start of the next month. This is shown by entering an opening balance on the debit side on the first day of the next month. The balance above the total line is known as the balance carried down or carried forward. The balance below the total line is known as the balance brought down or brought forward. In this example, we will look at balancing an account that has entries on one side only. We enter the highest total on both sides as before. We then enter the balance on the lowest side and also bring the balance down to the start of the next month as before. Take some time now to practice balancing nominal ledgers. Use the examples from the previous exercise in the double entry workbook. Return to this video when ready. Before you can start the nominal ledgers for the main exercise, you will need to understand one more concept. Previously, we saw that when we sell office furniture to ABC Limited, the office furniture account gives, and the ABC Limited account receives. Rather than having a separate account for every product, we can have just one account for all sales. Likewise, we can group all our debtors into one account called debtors. We can then say that the sales account gives, and the debtors account receives. We also change the referencing in each account. For now we can simply reference where we got the figures from, in this case, the sales day book. So if we collect all the totals from the sales book, sales returns book, and cash book, we can see how each one is entered in the nominal ledgers. As in the previous example, we credit the sales book, and debit the debtors account. You will notice, however, that the amount in the sales account is 10,000 and the amount in the debtors account is 12,300. This is because the VAT gets its own separate account. So now, the sales account plus the VAT account gives, and the debtors account receives. When it comes to sales returns, our customer gives and the sales account receives. Again, the VAT is treated separately. The VAT element is entered in the debit side of the VAT account. When it comes to posting the cash book, instead of using the totals, you will need to total the payments from debtors and enter those in the debtors ledger and the bank account as appropriate. This screen shows the opposite situation. Purchases and creditors transactions are entered on opposite sides compared to the sales and debtors. Your instructor will provide you with a finished example of a set of nominal accounts, and also a template of a typical set of nominal accounts and where their figures come from. And finally we get to the trial balance. A trial balance is a list of all the general ledger accounts contained in the ledger of a business. This list will contain the name of each nominal ledger account, and the value of that nominal ledger balance. Each nominal ledger account will hold either a debit balance or a credit balance. The total of the debits should equal the total of the credits. Because we have an account called sales, we must enter a line in the trial balance called sales. And because the brought down balance is on the credit side of the account, so too will the entry in the trial balance. The VAT account is treated in the exact same manner. The brought down balance in the debtors ledger is on the debit side of the account, so the entry in the trial balance will also be on the debit side. When all the nominal account balances have been entered, we total the two sides. If the two sides do not balance, this tells us that there is an error somewhere in our accounts. Complete the trial balance for the exercise you have been working on.